All right, today we're going to be talking about understanding retail behavior patterns in bull runs. And we're going to look at some indicators to let us know, because retail can be a telltale sign for market tops. Okay. And so we're going to take a look at some of those indicators and get into those details, looking at historical data and how we could use it moving forward, right? So the question is, have you ever wondered why retail investors are always seem to be buying at the worst possible time? Well, there's a reason for that. A lot of it has to do with being emotionally driven and FOMO, but we're going to get into those details. But ultimately, there's behavioral patterns in Bitcoin bull runs, and there's a particular timing that they usually enter the market. And then once they enter, we have a certain amount of days or weeks before we hit the top. All very good information to have, right? And then lastly, what we're going to do is kind of just help you understand these patterns to make the most informed investment decisions, right? All right. So since we have access to multiple 4-year halving cycles in the past, we can use those as data points. Of course, past results don't guarantee future results, but hey, let's take a look. So let's get into the behavioral patterns first. And what you're going to see is that there's a lot of media hype when Bitcoin starts to go parabolic. Now, right now, it's January 14th, 25, and we're sitting around 95,000. We've been chopping around between, usually 95 is about where we've been, but between 90 and 100,000. And things feel kind of slow. And I don't believe retail is here at all yet. Which is somewhat surprising, but at the same time, it's not, because we truly haven't gone parabolic yet, and that phase is to come. And I think it's a good thing, because if retail was piling in now, we wouldn't have, based on historicals, that much more room for run up. So it's good that we're not seeing aggressive retail yet. But yeah, what drives them in is media hype. And then there's FOMO, right? The fear of missing out. As they see everybody making money, and all of a sudden you start hearing about all these Bitcoin millionaires left and right. And there's going to be the social proof between people showing off, hey, look what I got, blah, 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 right? So where does retail usually come into these cycles, right? And the answer is it's usually the late stage surge of these ranges. And typically once retail enters the market, we have anywhere from about 6 to 12 weeks. This is based on 2013, 2017, and 2021 cycles that we top out, okay? So we don't have a ton of time once retail and FOMO really piles in. Now, the benefit is, to all this is, here's the pro, is them getting in is going to drive, it's going to help drive and make the single parabolic. And then because you have all these weak hands, right, and overbought, what happens is whales and individuals are going to take profits. That'll drive down. You've got all these weak hands that just enter the market, and then it's just going to, then you're going to see that big crash. So it makes sense from a psychological standpoint why we have these run-ups and then those kind of, and then enter those bear markets. Now, the nice thing is as you have the weak hands entering, some of them will stick around. A percentage of them will stick around, fully educate themselves and get in. And sometimes you have to have these crazy surges to get it on your radar to really put effort into learning it. I mean, that's how I got in. I saw this thing running up on past bull runs. I'm like, well, I got to educate myself, because I can't just sit on the sidelines and say, I don't understand it. Everybody can educate themselves, right? So that's why I believe there's still going to be market cycles going forward, because there's going to be weak hands and there's psychology involved, right? So what you're going to see is extreme media hype, and then you're going to see people just aping in left and right, and you're going to hear people. Now, here's the biggest one that I want to hit on is we're going to look at some data points. And what we've seen is once there's a good indicator, and this is the Coinbase App Signal, okay? App Store signal. So what this means is that most retail individuals, right, are going to come in through the gate that's least resistant, right? And so they're probably not going to go on Kraken and Binance and those kind of areas. They might, but they're likely going to purchase through something like Cash App, Robinhood, and most importantly, they're going to go through Coinbase. That's the most popular for retail investors to use. So this is an indicator, because once Coinbase hits #1 on the App Store of all apps, we're not talking about just finance, because we can't. That is a leading indicator. Once Coinbase becomes the #1 app on in the finance category, that means likely behind that in the weeks to come, or days sometimes, it will become the #1 app in the App Store. And that is when, historically, we only have 2 to 8 weeks left of the bull run, which is wild. That's not a lot of time, right? So this is one worth keeping an eye on, because this is an indicator, and it lets you know where we are in the current cycle and then where we are in a future cycle and how close we are to that. So what I'm going to do is I'm going to pull up on the screen here a look at where we currently are with Coinbase, okay, on the App Store. Now, the thing is, right now, you don't want it to be that high, because that means we're getting close to the end of the cycle, right? So we want to let this thing run up a lot more before we start to see that. So guess what? Good news is, with Coinbase here, we're looking at, here, let me move that real quick. So we got Coinbase, right? If we scroll down, it's getting high within the finance category. I get that, number 13. However, overall rankings, you can see here, right now we're at 155, okay? You can see right there, overall, iPhone tree overall, all right? Now, if you look back at some of these categories, okay, you can see here we've been sitting right around the hundreds, 150, really around the 200 mark, and we're starting to creep on up a little bit. But the good news is we still have time ahead of us, which is positive, because we want Bitcoin to run up. Okay, so then the next question comes. All right, let's take a closer look at some of the data points behind this, right? So what I'm going to do is I'm going to pull up some information here on historical bull runs, okay? And we're going to take a look at how much left, not just in time, but how much left from a price appreciation standpoint there was in the bull market after retail fully entered, and I'm going to say they aped in, right? Okay, so if we go ahead and look at historical data, right, when mass retail investors enter the bull market, the majority of the cycle's gains have already occurred, and the market is typically nearing the parabolic end stage, okay? So then we had an analysis done here, right? So 2013, the percentage left in gains was only 10 to 20% after they entered, okay? 2017, 25 to 50%, okay, was left, right? And then when we get to, and you can see here the entry points, right? And then mass entry between 40 and 60 in 2021, okay? And that was at 69,000 was the peak. And what was left once they entered was only 20% of the overall gains, okay? So let's take a look at what this would indicate for this bull run, right? What this means, you can see these key observations here, right? But on average, when mass retail enters, there is 10 to 30% of the bull run's appreciation left. And we've also identified the timing that there's about 8 weeks left in the bull market. So when Coinbase app hits #1 overall, okay, you have 2 to 8 weeks left of the bull run, and you have 10 to 30% remaining upside before the anticipated. Again, not all past results equal future results, but that's what we anticipate, is that we're near the top, 10 to 30% left from a price standpoint, and we've just got a few weeks before this thing runs out, right? I think this is good information to be armed with, so you can be prepared for when the top is. and you'll have to figure out what your trading strategy is going to be. And I'm not say trading as in getting in and out of positions, but if you're going to do lump sum orders or DCA, maybe you scale back on the DCA as we get closer, waiting for that drawdown, right? And then maybe you, after we hit the peak, you do your DCA, a dollar cost averaging towards the bottom. And then once we get around that November 26 time frame, maybe you start going bigger in lump sum investments, whatever you want. This isn't financial advice. But these are good indicators for you to keep an eye on, right? So let's do a quick recap here. One of the most interesting data points is that retail is getting in late. They have not entered yet, which is good because that means we still have more run up. We don't really want them to enter until this thing goes parabolic. Usually they don't because that's a signal that the bull market is coming to an end. Okay. On top of that, once the Coinbase app in the Apple App Store hits #1 overall, we have 2 to 8 weeks left in the bull market. I'm sorry. We have 6 to 12 weeks left once they, no. It's 2, I'm sorry, I'm right. Yeah, it's 2 to 8 weeks. Once Coinbase app hits #1, we have 2 to 8 weeks left in the bull market, and there's anywhere from 10 to 30% left until the top. Keep this information in mind. Like and subscribe below. Keep on stacking those sats, and things are going to only get more wild and crazy as the time goes on. Enjoy.